The electric car was supposed to be the future. Governments invested billions, automakers promised a revolution, and investors were told this would be the next trillion-dollar industry. For a while, it seemed unstoppable. Tesla's stock skyrocketed. Ford and GM rushed to announce new EV models, and every major brand wanted a piece of the electric dream. But now, the reality is hitting hard. Across America, car lots are overflowing with unsold EVs. More than 500,000 brand-new electric vehicles are sitting untouched, collecting dust, while dealers slash prices, offer huge incentives, and even beg customers to take them. Yet still, buyers aren't biting. The reason? The so-called green revolution has collided with economic reality. Drivers are facing higher interest rates, soaring insurance costs, and the harsh truth that owning an EV isn't as affordable or as convenient as the marketing promised. Charging stations remain unreliable, battery replacements cost thousands of dollars, and real-world driving range falls far short of the flashy numbers in commercials. What was once seen as the hottest trend in the auto industry is quickly turning into a nightmare. For manufacturers, this isn't just about a few unsold cars. It's a crisis worth billions. Ford recently admitted their EV division lost over $1 billion in just one quarter. GM is delaying launches. Even Tesla, the leader of the EV movement, has seen demand soften in key markets. So what happened? How did electric cars go from the future of transportation to a market crash unfolding before our eyes? And what does this mean for millions of drivers and for the entire auto industry? In today's video, we're going to break it all down. We'll uncover the reasons behind the EV collapse, look at the staggering numbers automakers don't want you to see, and reveal why this so-called revolution may already be failing before it ever truly began. At first glance, you might think the EV problem is just about high prices. And yes, electric cars are expensive. The average cost of a new EV in the United States is over $55,000, far more than most families can afford. Even with government tax credits, that price is out of reach for millions of buyers already struggling with rent, groceries, and record-high interest rates on loans. But cost is only the beginning. The real problem is that EV ownership isn't as easy or as practical as automakers promised. Reason number one, charging. Despite years of government investment, charging infrastructure remains patchy, unreliable, and inconvenient. Drivers in cities wait in long lines at charging stations, while rural areas often don't have stations at all. And unlike filling up a gas tank in 5 minutes, charging an EV can take anywhere from 30 minutes to several hours, if the station is even working. Reason number two, range anxiety. Manufacturers love to advertise 300 or even 400 miles per charge. But real-world conditions, cold weather, high speeds, or simply using air conditioning, can slash that range by 30% or more. For many drivers, the fear of running out of power on the highway is enough to stay away from EVs entirely. Reason number three, hidden costs. Insurance rates for EVs are significantly higher than for gas cars because repair costs are so much greater. Even a minor accident can lead to a total loss, as battery replacements cost tens of thousands of dollars. Used EVs? Their resale value is collapsing because nobody wants to be the second owner of a car with a battery that might fail. And then there's the bigger picture. Automakers are pushing EVs because governments demand it, not because consumers are asking for them. Many drivers still prefer gas-powered vehicles for their reliability, lower cost, and long-term durability. The result? Showrooms are full of electric cars that people don't want, while demand for trucks and hybrids remains strong. This combination, high prices, poor infrastructure, hidden costs, and consumer distrust, is why 500,000 electric cars are gathering dust across the country. For carmakers, the EV slowdown isn't just an inconvenience, it's a financial disaster. Billions of dollars have already been poured into research, new factories, and supply chains designed around electric vehicles. Ford, GM, Volkswagen, and nearly every major automaker built their future strategy around EVs. Now, that strategy is collapsing in real time. Take Ford, for example. Their electric division reported a staggering $1.3 billion loss in a single quarter. That's more than $60,000 lost for every EV they sold. To stem the bleeding, Ford has already cut production targets, delayed new EV launches, and even warned that future job cuts are inevitable. GM isn't doing much better. After betting big on their Ultium battery platform, GM is now scaling back production goals, pausing new EV rollouts, and quietly admitting that consumer demand isn't living up to the hype. Volkswagen, once aggressive about catching Tesla, has also slowed EV investments after seeing inventories pile up in Europe. And then there's Tesla. While still the market leader, even Tesla isn't immune. Deliveries have slowed, profit margins are shrinking, and competition from Chinese EV makers like BYD is cutting into global sales. For an industry once defined by growth, the signs of saturation are everywhere. The ripple effects go far beyond Wall Street earnings. Factories built for EV production are running below capacity. Suppliers who invested in batteries and EV parts are facing financial stress. And in some cases, workers are losing their jobs as automakers cut shifts or delay projects. In short, what was supposed to be the future of the auto industry is now a giant liability. With over 500,000 EVs sitting unsold, automakers are faced with a choice. Either keep slashing prices, losing billions in the process, or scale back production and admit the EV revolution isn't happening as fast as they promised. This isn't just a temporary dip in sales. It's a structural problem that threatens the long-term stability of the auto industry itself. The collapse of EV demand isn't just an automaker problem. It's a consumer problem, too. For years, politicians and executives promised that electric cars would soon be cheaper, better, and more accessible than gas vehicles. Instead, many families are watching prices rise, incentives vanish, and the cost of ownership spiral out of control. For buyers who already purchased an EV, the situation is especially painful. Used EV values are crashing at record speed, sometimes losing 40 to 50% of their value in just 3 years. Owners who financed their cars now find themselves underwater on their loans, owing far more than the car is worth. Banks and lenders are starting to notice, raising fears of a new wave of auto loan defaults. Meanwhile, higher interest rates make financing even harder. A monthly payment on a $55,000 EV can easily top $900, and that's before factoring in insurance and maintenance costs. For most households, that's simply unsustainable. But the effects ripple out beyond individual buyers. Dealers, who once lined up to stock electric cars, are now begging automakers to slow shipments. Showrooms are clogged with unsold inventory, tying up billions in capital. Some smaller dealerships are on the verge of collapse, unable to move vehicles that no one wants to buy. Even energy and infrastructure plans are being thrown off course. Billions were earmarked for charging networks, but if EV adoption slows dramatically, those investments may never pay off. Consumers who were told to go electric now face confusion. Should they stick with gasoline? Should they wait for hybrids? Or should they gamble on an EV that might not hold its value? At its core, the EV crash reveals a deeper truth. The market, not the government, not the automakers, decides what succeeds. And right now, the market is rejecting 500,000 electric cars. The question now isn't just about automakers, it's about trust. If consumers no longer believe in the EV promise, then the entire industry could be forced back to the drawing board. The EV revolution was supposed to change everything. Cleaner streets, cheaper transportation, and a booming new industry that would replace gasoline forever. Instead, what we're seeing looks more like a collapse in progress. 500,000 electric cars are sitting unsold. Automakers are bleeding billions of dollars. Consumers are losing confidence. And governments are quietly scaling back their most ambitious mandates, realizing that the market isn't moving as fast as they once promised. The truth is simple: electric vehicles are not dead, but the hype around them is. The fantasy of a smooth, unstoppable transition to EVs has been shattered. What comes next will be messy. Some automakers will double down, slashing prices and taking massive losses just to stay relevant. Others will quietly pivot back to hybrids and gas-powered models. And a few, perhaps the boldest, will collapse entirely under the weight of their failed EV bets. For consumers, this chaos means uncertainty. Should you buy now while prices are dropping? Or wait, fearing your investment will lose half its value in a few years? Should you trust automakers who once promised the future, but now can't even sell the present? And for the auto industry as a whole, the stakes couldn't be higher. $1 trillion of loans, investments, and subsidies are tied up in the EV dream. If this collapse continues, it won't just hurt automakers. It could ripple through banks, dealerships, workers, and even the global economy. In the end, history may remember this moment not as the birth of the EV revolution, but as its first great reckoning. The technology is here, the cars exist, but the buyers? They're nowhere to be found. So the real question is, will electric vehicles recover from this meltdown? Or are we witnessing the beginning of the end for the EV dream?